Well, joining me now to discuss this is Arise business correspondent Laurie Laird in our London studio. Laurie, great to have you again. Now, isn't this an unusual, if not unprecedented move from Apple?
It really is unusual, and as we said earlier, it absolutely shocked the market. But the more I think about this revenue update, Jane, the more I think it shouldn't have shocked us. I think that Apple has been giving us warnings. We've just chosen not to see them. We knew that iPhone sales were going to stall at some point. The smartphone market is simply maturing. It's maturing in the developed world. It's maturing in the developing world. Not to mention in the developing world, there's a whole lot of competition. In China, which is such a high-growth market, or had been such a high-growth market, that market is maturing, as we said, and also there are a number of homegrown alternatives. Huawei, the Chinese smartphone maker and also telecom communication kit maker, has recently displaced Apple as the second biggest seller of handsets in the world. So we should have seen this coming. Not to mention, when we saw Apple's quarterly results in November, they told us that they would no longer break out unit sales of iPhones. The fact that Apple doesn't want to tell us how many units it's selling each quarter should have been a red flag. We should have seen that some pretty negative news was coming down the pipeline.
Laurie, does this mean the iconic company's best days are behind it?
This is a very good question, Jane, and it feels like we've been calling the top for Apple for such a long time, not only just with iPhone sales. Recently, a lot of analysts have been concerned that 66% of Apple's revenues come from one product, and that's the iPhone. And so this has been a perennial worry. Apple has tried to address this to a certain extent, and Tim Cook on many occasions has said, look, don't think of us as a handset maker, a hardware maker. We are a digital services company. Our fastest growing source of revenue is services, things like buying apps, downloading music, all of those whizzy services that you can get on your iPhone. And to be sure, that is a fast growing stream of revenue for Apple. It's expanding by about 19% a year, which is much faster than the rest of Apple's product line. But it still only comprises less than a tenth of Apple's business. So revenues from services were just under $11 billion in the latest quarter. Let's annualize that in a rough way. That looks north of 40 over a full year. That's revenues on par with, say, Goldman Sachs or Morgan Stanley. So yes, a hefty revenue stream. It could stand on its own as a company, but still we're looking at revenues of north of $100 billion for Apple as a whole over a year. So still a tiny part of the business. It will take a while for that to displace the handset operation as a money earner. Now, that said, I think Tim Cook has made much of the problems in China, but a lot of people are saying that Apple may be pricing itself out of the market. It may be a victim of its own success. One, Apple introduced its latest phone with a price tag of £1,000 per unit. That's simply out of the reach of a lot of people, particularly in the developing markets. It's certainly out of my reach. So a lot of analysts are wondering whether Tim Cook has used the excuse of China, where growth is slowing and where the market is becoming more mature, but is using that to cover the fact that maybe Apple has priced itself a little bit out of the reach of many consumers.
Now, Laurie, there seemed to be a silver lining for one investor. Who could that be?
That's the way. It's a conglomerate. It takes stakes in a wide range of companies, and historically has taken stakes in old-fashioned, old economy companies, things like railroads, things like insurance. Warren Buffett himself has been self-admittedly slow to the technology game. In 1991-92, when technology shares were taking off, he said, I'm not going to touch technology shares. I don't understand it. I'm going to buy things that I understand. And he's been a long-time investor in Coca-Cola, McDonald's, things that he does understand. He came late to the game with Apple. He's earned quite a bit, initially earned a lot on his investment, but recently said, I'm so sold on Apple right now that I wish the shares would drop so that I could pick up more of the share capital of Apple. He's got his wish.
All right, then. Hopefully it drops for you. Now, moving on, let's turn to Europe. Tell us more about next results.
I think a lot of investors in the UK, Jane, saw these results and breathed a sigh of relief. It feels like over the past month or so, you and I have spoken of nothing but this UK consumer downturn, and that footfall in the month of November and the pre-Christmas trading at retail stores was so very weak. And a man called Mike Ashley, who owns the Sports Direct chain and has stakes in other department stores in the UK, said that November was absolutely appalling and that he expected a number of retailers to go out of business after this Christmas holiday. Turns out that from the retailers that have reported already, and it's early days to get Christmas sales, the retailers that have reported already have not given us too gloomy a picture. Next numbers were pretty good. Sales up about 4% in the week before Christmas and the week after Christmas. Now, Next is a bit of an unusual beast in the UK. About half of its sales come online, and we're seeing ever more commerce in the UK move online. So Next is well placed to capitalize on that. But we also saw some pretty good numbers from John Lewis yesterday, which is a UK department store seen of as a bit of a bellwether because it reports first, and it's a multi-purpose retailer. Sells everything from clothes to haberdashery. Also said that their Christmas numbers were pretty good. Both retailers acknowledged that November had been rough, but they both said that they had saw a rush, an unexpected rush, in the few days leading up to Christmas. So it's still too early to say whether seasonal shopping patterns have changed and whether the introduction of Good Friday into the shopping calendar, it's an American import, but it started to influence shopping patterns in the UK and further afield. It may be that retail sentiment, consumer sentiment is doing okay, but people are shopping at different times than they used to, so it's difficult to compare the same time period this year with a year earlier or 2 years earlier.
All right, Laurie, just before I let you go, there seemed to be a softening of inflation in Turkey. Can you tell us what that is all about?
Yeah, all of a sudden we've all become macroeconomists looking at Turkey because the numbers there are so absolutely shocking, and it's an economy at the crossroads of Europe and Asia. It's an economy that matters. Any kind of collapse in Turkey would certainly spread throughout the region. Turkey has been afflicted by, 2 years ago, very high growth, which bred very high inflation. Now, the Turkish government has said that they don't think that interest rates should rise to fight inflation. This goes against the grain of thinking of most conventional economics. There was pressure on the central bank not to raise interest rates, and inflation came out of control up to about 25% per year. A lot of Turkish companies have borrowed in dollars, and so this inflation has made those debts so much more difficult to pay, and there's been lots of anecdotal evidence of Turkish bankruptcies, particularly in the retail sector. Inflation has come down. It's come down to just over an annual rate of 20%. Let me put that in perspective. In most of Europe, the inflation rate is somewhere about 1%, certainly under 2%. So inflation is coming under control. Mostly that's because the economy is slowing. Many economists think Turkey may fall into recession this year. But the question is, Turkey has local elections coming up in the spring. President Erdogan of Turkey has said that he does not think inflation warrants higher interest rates. He may feel obliged to put pressure on the central bank to reduce interest rates further ahead of these local elections, thereby igniting inflation once again. So still a lot of uncertainty over the state of the Turkish economy and the people who are running the Turkish economy.
All right, Laurie Laird, a Rise Business correspondent. I just realized this is the first time I'm talking to you in 2019. Happy New Year to you, and thank you so much for your time.
Happy New Year, Jane.